Hi, this is Matt from InvestiQuant. Today is Wednesday, February 10th, 2021. This morning we saw the markets gap up above the prior session high. We ended up opening up at all-time highs, and we had a pretty quiet open for about the first 30 minutes of trading or so. Then the markets broke lower. They did so pretty rapidly there. And we quickly had an outside day form. We ended up with about 48 points of range or so in the S&P as we took out yesterday's low and then went below by quite a bit. We have since started to recover. We've been consolidating here around the middle of the range and starting to lift just a little bit as we start approaching the afternoon session. So we're going to use this afternoon's daily IQ to test this exact type of price action where you've got an outside day that's trading in the middle of the range as we approach the close. So let me go into Discover and we will set this up in all four instruments. The setup is going to be based upon entering the market long at 3 p.m. Eastern Time. The exit set to the end of regular trading hours, which is 4:15 p.m. Eastern Time. Now, this morning we opened up above the prior day high. So when I go into the opening filters section, I'm going to hit equals next to open above the prior day high to add that piece of information. Next, I'm going to go into the post-open filters and I'm going to create the outside day pattern. Now, since we opened above the prior day high, I don't need to put that it has a higher high. All I need to do is say that the low is below the prior day low. So to do that, I can come into the intraday low versus daily levels section, and I can scroll down to where it says less than the prior day low. So that means the intraday low as of 3 p.m., since that's the entry time, is below the prior day low. Let me hit equals next to it. That will add it to the test. And then next, I want to say we're trading in the middle portion of the range. We're right around the midpoint right now, which is currently 39.02 in the S&P. So to do that, the way I'm going to build this out is to say we're not trading near the highs and we're not trading near the lows. So I'm going to use an exception statement. I don't normally do that in these videos, but it's a cool little thing that you can do here within Discover to exclude different patterns. So to do that, I'm going to go into the intraday close, which is going to be referencing the price at 3 p.m. And I'm going to say it's not in the top 25% of the range. So if I hit minus next to close in top 25% of the intraday range, that'll add it. And then next I can scroll down and I can say it's also not in the bottom 25% of the intraday range. So by excluding both of those patterns, that means the price would be somewhere in the middle 50% of the intraday range. Now, of course, I don't know if we're going to be there at 3 p.m. because it is not 3 p.m. right now, but currently we're trading right around the midpoint. So I'm going to make the assumption that we're going to be somewhere in that general ballpark as we approach 3 p.m. Now, lastly, I'm going to put us in a similar market environment, which is above a 10, above a 200-day simple moving average. Pretty bullish markets here recently. Now I can click View Results. And here we go. These are the results of going long at 3 p.m. Eastern Time, exiting at the close, 4:15 p.m. Eastern Time, when you have an outside day that formed with an open above the prior day high. The low is below the prior day low, and then you're trading in the middle 50% of the intraday range. This is taking place above a 10 and above a 200-day simple moving average. Now, historically, only 24 samples of this pattern taking place in the S&P, so not very common, and that's dating back to 2003. We've got 35 samples in the NASDAQ, 23 in the Dow, and 20 in the Russell. If we look at the win rates on them, all of them are at least above 50%. So none of them are coming off as weak, but you've got the S&P and the Russell a little bit stronger. So the S&P 63%, the Russell 65%, whereas the NASDAQ and the Dow right around 55% each. So NASDAQ 54, Dow 57. If we look at the average win, average loss, you can see average loss has been a little bit larger in the S&P than the average win. So even though it's won a little bit more often, when it's lost, the losses have been a little bit larger than those wins that have taken place. For the NASDAQ, the average win, average loss, pretty similar in size. That is also the case for the Dow. So neither one of those showing much of an edge in either direction. And the average trades are resulting in about the same amount on the upside versus the downside. And then Russell, the average win is larger than the average loss. So average moves kind of all over the place there, not really anything in agreement as a group. And then if we look at the win rates, they have been a little bit more favored towards the upside historically, Russell and ES being the strongest of the group. So hopefully you found that helpful. Good luck today, and we will see you next time.